Hey everyone, the semiconductor industry is showing clear signs of bottoming out and starting a rebound. That's on the back of rising demand for artificial intelligence and the increasing computing power that's needed. But which one is the better semiconductor stock to buy, Intel or Applied Materials? I'll look at these two semiconductor stocks on revenue, on operating profit, on return on invested capital, and compare their valuation using the forward price to earnings ratio and answer which one I think is the better semiconductor stock to buy today to capitalize on the rising effectiveness of AI.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with the revenue on a trailing 12-month basis. If we look back over the last decade, Intel and Applied Materials had been growing nicely, but Intel hit a big slowdown given the decrease in demand for personal computers following the economic reopening in 2022. Applied Materials, instead of having revenue decrease, just kind of has been flat, right? It reported quarterly results recently, and its revenue growth year over year was just flat. Instead of growing, they've kind of been flat during this cyclical downturn, but they're in a great position to benefit from the rebound, as is Intel. Intel, remember, has invested billions of dollars and is investing billions of dollars, benefiting from government incentives to expand manufacturing capacity for semiconductors domestically, and those investments are going to lead to revenue growth down the line for Intel. Applied Materials will benefit because it's a supplier to Intel. As Intel spends more money, it needs to purchase materials from Applied Materials, and Taiwan Semiconductor, another semiconductor manufacturing company, is also expanding aggressively and will need to purchase from Applied Materials. So they both have good prospects going forward given this cyclical rebound, and I suspect they will both have revenue growth increasing over the next few years. Hard to determine which one will have stronger revenue growth over the next few years, but they will both benefit from that upside. The next thing I wanted to look at is their operating profit margin. And for Applied Materials, they demonstrate what I like to refer to a lot of times, and that is the economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. And so now that you understand why that's critically important, you can see Applied Materials demonstrating that. Its operating profit margin up to 28.89% in the most recent trailing 12-month period. That's up from around 12% in 2015, more than doubling its operating profit margin. Intel, even before this cyclical slowdown caused by the PC industry downturn, was growing its operating profit margin, but not to the magnitude that Applied Materials has increased its operating profitability. So it too was demonstrating economies in scale, but not as pronounced as Applied Materials. And certainly Applied Materials has the wide lead here in the operating profit margin over the trailing 12-month period. The next metric I wanted to consider is the return on invested capital. To simplify this metric, it measures how good a company is at taking money from shareholders, investing it in products and services that deliver profits for the company's shareholders longer term. So it's essential for delivering value to shareholders. How good are you at taking investor money and investing it in future growth opportunities? Applied Materials has done an excellent job of this and has gotten better over time. You can see that improving here from a little less than 15% in 2015 all the way up to 34% in the most recent period. Now, Intel had also done a solid job, roughly 15% in 2015, rising up over 20% before the cyclical downturn has caused it to be roughly around 2.6%, rebounding off the lows and moving higher. So Intel, a respectable average over the last decade, if you exclude the recent cyclical downturn and the massive investments it's making in manufacturing expansion, roughly 15 to 20% average return on invested capital. That's pretty much reasonable to expect from Intel going forward from the projects that it's investing in now. Maybe a little bit more because Intel previously from 2015 to 2020 or 2021, those investments that it made into the business didn't have the support of billions of dollars of government backing. The current investments do have that. So the cost of those investments are likely lower. The capital investment required is likely lower because the government is partnering with Intel or giving Intel billions of dollars to support those expansions. So if it was previously going to spend 10 billion, it may only be spending 8 billion now or 7 billion because the government is giving it 2 or 3 billion in grants and then another couple of billion in loans. So that's going to reduce the cost of those projects, and so whatever profit comes in is going to be compared to a lower cost base. So that's likely to improve Intel's return on invested capital going forward. And finally, I wanted to compare these two on valuation, and using the forward price to earnings ratio, Intel stock is now cheaper than Applied Materials when over the last 3 years it's consistently been the more expensive stock. Applied Materials now trading at a forward PE of 21.93, while Intel is trading at a forward PE of 15.96. But given Applied Materials' superior performance and its better prospects over the near term, if I had to pick between these two semiconductor stocks, I would pick Applied Materials as the better semi stock to buy today. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.